Hello, good evening and welcome. I'm Karima Brown and you're watching Political Exchange, where we unpack Africa's political economy. The crisis in the Eurozone is hastening a long-term shift in the global economy, meaning that Africa's trade will increasingly be refocused toward the emerging markets of Brazil, Russia, India and China, as well as toward other African countries. That's according to South Africa's Trade and Industry Minister Rob Davies. Of course, these shifts have been a long time coming, and Davies is on record that Africa's largest economy is eager to diversify trade with emerging markets and to take advantage of the new developments. He now joins me from our Cape Town studios to talk more about South Africa's trade policy. Minister, you are on record saying that our formal inclusion in BRICS has given us the ability to act as a focal point for African investment. But of course, we need to do more to endeavor to break down trade barriers and integrate our markets. Take us through how far we've come in terms of getting along with integration, particularly as it concerns the efforts on the tripartite arrangements on the continent.
Yes, indeed. Good evening, and thanks for having me on the program. Well, I think if we look at the emerging decade or so into the future, we can see that dynamic emerging economies are all turning to their domestic markets as a very strong base and lever of growth in the future. This is the case of China. This is the case of China's new policy of focusing on its domestic market, of developing an import policy. It's one of the legs on which India has grown, and it's also a focus for Brazil. Now, the trouble we have as African countries is that colonialism divided us into 54 different countries. Each of us is too small on our own as individual countries to sustain what the continent needs is an industrialization effort. And so what we really need to do is to push our integration further forward. And as you correctly indicated, one of our important focuses now is the tripartite process, which is between SADC, COMESA and the East African Community. And that would establish a free trade area from Cape to Cairo on the east coast of the African continent, 26 countries, a combined population of about 600 million people, and a combined GDP of $1 trillion US. Now that gives us the sort of scale on which we could be realistically moving towards an industrialization effort on the continent. But we have adopted a framework which we call development integration, and I think that basically says that we cannot integrate merely on the basis of a formal trade arrangement because many of the barriers to promoting a greater inter-regional trade and rising from the situation where only about 11% of our total trade at the moment encompasses trade with other African countries. It's bigger in the case of South Africa, but the factors that keep this low are to do with underdeveloped production structures, inadequately diversified economies, and also infrastructure. So the tripartite is combining the establishment of a free trade area across the existing regional communities with programs to support infrastructural development and also a program to promote cooperation on industrial development. So where are we? I think we've identified the parameters of the negotiation, and I think a very important decision that's been taken is that we will not try to renegotiate the existing regional integration arrangements that we have got, the existing trade arrangements within, let's say, SADC. We're not going to reopen the SADC FTA. We're going to focus on building trade across the frontiers where there are no existing preferential trade agreements. So it'll be, for us, it'll be negotiating trade agreements with those parts of the tripartite where we don't have any existing arrangements, countries like Egypt, countries like the East African Community, some of the other countries in Central Africa. They will be the focus of the trade negotiations. On the infrastructure, we've got the North-South Corridor program, which is making quite a degree of progress. and the industrial cooperation pillar yet has to be seriously addressed.
Minister, before we move on to infrastructure, which of course is a main part of how to build regional integration, let's just talk quickly about time frames on the process that you've just outlined. I know that there's been several engagements, and could you just set out the timelines for us in terms of the tripartite efforts?
Well, the heads of state at the summit in the middle of last year, they gave us 3 years to complete, which means it should be finished by the middle of 2014. But it was understood that those are indicative time frames to guide the work program, and that it's not going to be a train smash or an absolute disaster if we're a little bit beyond those.
Of course, you on record saying that Africa's challenge is to move off an economic growth path built on consumption and commodity exports and to move onto a more sustainable developmental path based on industrialization. We know that the infrastructure rollout for SADC has been approved, particularly at heads of state level. Minister, where is the money going to come from to match the ambition?
Well, I think that there's a number of possibilities, and I think some very interesting new ones that are beginning to open up. What we do need to do, I think you correctly point out, is we need to focus on building infrastructure that connects up our economies one to another. The existing infrastructure on the African continent is largely orientated towards taking unprocessed products from inland to the port and then out of the continent altogether. That's the pattern of engagement in the international trading system that most African countries have become part of. What we need to do now is to build the infrastructure that links us up. I think that what's happening is that Africa has now become recognized as the next growth frontier after Asia. And we've seen a growing interest on the part of foreign investors as well as various international financial institutions. And I think that important developments like the BRICS-led development bank, which we've agreed on at the last BRICS summit, and which when we host the next BRICS summit in Durban next year, we hope that there will be some very significant steps further forward in that project. I think we're looking and hoping that this can be an instrument also to channel surplus capital from some of our fellow BRICS countries to support infrastructure development on the African continent, which is in fact going to yield better returns than some of the traditional investments in the still stagnating developed world where some of these surplus capital funds have gone up to now.
Okay. Now, of course, we spoke a little bit about how South Africa's membership to BRICS gives us leverage. But of course, the BRICS countries are both our partners and our competitors. And the President, yourself, have gone to China, and we've spoken about recalibrating our relationship with China so that Africa benefits and that it's not a one-way street. In your estimation, Minister, are we getting that balance right? Is Africa able to negotiate with China to get a better deal so that we're not just a place where people come to extract raw materials?
Yes, well, I think that first of all, I would say that there has been a very, very significant and steady diversification in our trade relations with other BRICS countries, with China leading the pace. So, for example, in the case of South Africa, last year we had, on our figures, a 29% increase in our trade with other BRICS countries, and it was in the mid-30% increase when we look at China, and on their figures it was much more. So the pace of the trade relationship is not the problem. The problem we've got is the structural content of that trade relationship. Our exports to China start with iron ore, and then they go through with other unprocessed mineral products, the top 10. Our top 10 imports from China start with cell phones, and then it goes through a whole range of other high-value manufactured goods. And I think that we have agreed with China bilaterally in the framework of our comprehensive strategic partnership agreement that we need to work together to bring about a better structural balance in which there are more exports of value-added products from South Africa in the Chinese market. And last year we gave them a list of 10 value-added products which we said we believed we could supply into China. We have set an internal target of trying to see that 2 of those enter the top 10 within a reasonable period of time. And China has cooperated with us in trade exhibitions which were held last year in several places in China, and we scored 400 million rands worth of confirmed export orders as a result of that endeavour. Now that will be followed through with further trade exhibitions this year with the support of China, and we're also talking about them bringing buying missions to focus on these value-added products. So that's what we're seeking to do. At the same time, we've indicated to them, and they've agreed, that they should work with us to beneficiate at a higher level mineral products before we export them to them. And within the framework of our own PICC, Presidential Infrastructure Coordination Commission work, there are a few projects which envisage Chinese investments in adding more value to our mineral products before they export it to China.
Now, of course, the entire world's focus is currently on South Africa, given what's happened at Marikana. You are on record as giving investors an assurance that there will be stability in this industry. Minister, how sure are you that the mining industry in South Africa is going to be handled in such a way that not only do we attract investors, but we initiate the necessary change to address our big inequality problems?
Well, I did say, first of all, that we have not seen at this point in time any fall off in the foreign direct investment pipeline. We had a 50% increase in FDI in South Africa last year compared to the year before, and we continue to see a growing interest in the South African market, and we've seen no withdrawal from the FDI pipeline. The reaction so far to Marikana has largely been within the company concerned, as well as to some extent elsewhere in the mining sector, and particularly the platinum mining sector. But I think we're not complacent about that, because I think we do feel that we need to be proactive in assuring investors that we're not about to act in any way which is irresponsible as a government, but also that the issue that has been highlighted at Marikana of the inequalities, as you say, and the conditions of mining communities, as well as workers in the mining industry, that we do need to give priority attention to that. And I think that the appointment of the Judicial Commission of Inquiry, I think that has been understood as an appropriate reaction. The determination of the government to ensure that an incident like this, which should never have happened in the first place, doesn't recur. I think these are all signals that we're sending out. But obviously, of course, it is our responsibility to make sure that we deliver on those commitments.
Minister, we have to take a short break, but when we return, we will continue our conversation unpacking South Africa's trade policy trajectory with Minister Rob Davies.